The tabloids got you all freaked out about these new capital gains increases. Well, stop. Stop making your decisions based around fear and make them based around facts. There's never been a good decision ever come from fear. Hi, I'm Wade Hamblin, Remax Hallmark Eastern Realty, your PTBO realtor, and I wanted to share with you a quick story of a client that called me looking to sell and list his waterfront property here in the Kawarthas, but he wanted it closed before June 25th. Well, that triggered a question. Why do you need to sell it so quickly? Why do you want to get it on the market and sold and closed? I'm all about trying to list your property and making a commission quickly, but let's take our time and be able to show your property in its best light. Maybe we need to come in and do some painting or get some flooring put in or declutter or depersonalize a little bit. Let's get production in there and get video and drone work, and let's make this a big deal because there's a lot to gain for you if we can show it in the best light for your buyers. And his fear was paying too much or more capital gain than he would pay today. And I'm like, wait a minute. Okay, now I'm going to recommend to you that you slow down, go talk to an accountant, talk to somebody that understands these new capital gains laws and also understands your portfolio, because everybody's portfolio is different than the person beside them. But here's what I do understand about these new capital gains laws. Number one, they aren't approved yet. So when they get approved, because I'm guessing they're going to, but when they get approved, anything that closes that's not your primary residence, it's a rental property, it's a cottage, it's a secondary investment, it's something that's not your primary residence, anything that closes on or after June 25th will be subject to these new laws. Well, what really has changed for people? Well, if your gain on that property is under $250,000, nothing's changed. Your capital gains is still 50%. If your gain is above $250,000, then that's when it changes for personal income tax. Your new inclusion rate is 66.67% on the gain above the $250,000. Well, sure. None of us want to pay more in taxes. The money's better off in my pocket than in the government's pocket. But are you actually losing money by trying to rush into this? And so, absolutely, speak with an accountant, speak with people that understand the new capital gains laws that might be coming, but also speak with somebody that understands your portfolio, because everybody's portfolio is different. But this is how I understand these new laws. Let's say, for an example, your full-time job, you earn $75,000 a year. That's what you earn in your full-time job, and you have a cottage property, and you bought that cottage for let's say you bought it for, I don't know, $300,000, and you sell it for, say, $700,000. So you have a gain of $400,000. Well, there's expenses in selling that property, and there's also expenses that you've incurred over the course of the, I don't know, 6 or 7 or 8 years that you've owned that, upgrades and new furnaces and all that kind of stuff. So let's say your gain is actually $300,000. That's how much profit you actually are going to put into your pocket from the time you purchased to the time you sold it. So $300,000 on the old tax model, this is how I understand it. 50% of that becomes your inclusion rate. So that means you're going to take 50% of $300,000, which is $150,000, and you're going to add that to your $75,000 income, which now is $225,000 in income that year, that you're going to have to put that on your income tax and claim $250,000 of income based on your tax rate, whatever you pay from that. So let's say in this new capital gains laws, for the first $250,000, you're still 50%. So $125,000 of that is included in your income. And then from the $250,000 to the $300,000, that's $50,000. It's now taxed. It's now going to be taxed at 66.67% if this law gets passed. So that'll be $33,335. So now you've got $158,335 that you got to add to your $75,000 income from your job, and now you're at a tax. Now you're being taxed on $233,335. So round numbers, $233,000. versus $225,000, you have an $8,000 taxable income increase. So if you pay 50% tax, you've got a $4,000 added expense or added tax that you have to pay to the government. Well, I'm almost positive that we could probably get more than $4,000 for your home if we take the time to do proper video, proper editing, proper drone work, proper photographs, getting the property ready for listing, and actually take our time to put it in the best light for the buyers. Do I want to pay more taxes? No. Do I want to sell the property quick? Yes, but not at the expense that you're going to lose more money than what you're actually going to pay in taxes. And so my recommendation was to call your accountant, figure out how this is going to affect you if you sold your property at this price, and how it will affect you in your taxes this year. Again, just get professional help and get somebody that understands these capital gains, and stop reading the tabloids that are just trying to scare us and put us into fear.